A very good morning, traders. Today is the 17th of January and time is now 9:21 a.m. GMT. My name's Aaron Hill, and as usual, welcome to another edition of Technical Talk. Overnight, we saw the fourth quarter GDP rise by 4% from a year prior. Economists' forecasts expected China to report a fourth quarter GDP growth of around 3.3%. China retail sales, however, actually missed expectations, rising by 1.7% in December from a year ago. Forecasts for the release predicted a 3.8% increase. Now, overall, the Aussie dollar, the immediate response from the Aussie dollar pair was muted, embracing the lower side of the 72 psychological figure. The connection between the currency pair and China's data is in part due to China being Australia's largest trading partner, followed by Japan. Now you will note from your own Aussie dollar chart that subsequent price action did see the unit take on 72 and head for a high of around 72.15 an hour or so later. You will also see that price, the price of the currency pair actually came within a whisker of 72 to form support in early European hours. Aside from China's data, we have let's remind ourselves that first off, that US banks are closed in observance of Martin Luther King Jr. Day. This may lead to a quieter than usual trading session during US trading hours. Going forward in the week, we do have UK economic data in the spotlight. Labour data is set to fall on Tuesday, inflation data coming out on Wednesday, and retail sales figures on Friday. And of course, we also have the minutes from the ECB from the December ECB meeting set for Thursday. So as for markets in Asia and Europe, so overnight Asia equities ended mixed. Japan's Nikkei 225 added 0.7%. South Korea's Kospi actually dipped 1.1%, while Australia's ASX 200 added 0.3%. Now, in terms of early Europe, in the European cash equity index market, London's FTSE 100 is up by, so we're higher across the board in Europe right now, with London's FTSE 100 currently trading 0.7% in the green. Germany's DAX is up 0.3%, while France's CAC 40 is also up by 0.7%. Euro Stoxx 50 is also up 0.5% as we speak. Now, as for the major currency pairs right now, Euro dollar currently trades at 14.26 and is up by 0.1%. Aussie dollar is up by 0.1% also, and currently trades at 0.7217, while the dollar yen trades at 114.47 and is up by 0.2%. Now, just bear with me. I'm just going to flip things over to the charts. And we're going to kick things off with the euro dollar just really quickly. Excuse me. And our main focus remains on the higher time frames. As you can see, we did actually form a reaction from the weekly time frames resistance area at 1473, 1583. And what this has done is the break is hamper buying from above the recent break of the trend line resistance on the daily time frame here. In actual fact, we did form a bearish engulfing candle on Friday, which, as many technicians will know, a bearish engulfing candle involves the bodies, not so much the upper and lower shadows. And if you do look closely, the open and close are different. So the open for Friday does engulf the close of Thursday. So with that, do be aware we could potentially, the whipsaw above here did did likely trip a truckload of buy stops above here, so we could see some subsequent sell-off result this week. Moving over to the pound dollar now, with focus largely being on the daily time frame here. As you can see, we did connect with the 200-day simple moving average, currently trading at 37.33. Now, we did connect with this dynamic value on Thursday, and we formed what's known as a, let me just zoom in, as what's known as a shooting star. This was on Thursday, followed by a subsequent downside move on Friday, which touched a low of 36.53. Now, downside targets this week, as we did note in the weekly technical report, rest around the support area at 36.02, followed by trendline resistance turn support. Now, this is taken from the high of 42.50. Now, what you will also note from the H1 time frame over here is a move down to the 136 region, as per the daily time frame. Does line up obviously with the 136 psychological figure, but also lines up with demand coming in at 35.80, 136. Now, quickly onto the US dollar index. We did have a reasonably decisive bounce from support on Friday, and this support comes in at 94.65. Now, do bear in mind, this is the daily time frame. Now, since that bounce, we are seeing a mild reaction from a breached trendline support. Now, this trendline support comes in from the low of 89.84. Now, should we get a reaction? Should we observe a reaction from this trendline support term potential resistance? We could be heading below this support and potentially try for a move to the decision point at 92.71, 93.53. Okay, on to the major US major equity markets. It's really been showing some harmonic respect at present. So for any harmonic traders, this may be of interest. And we've seen a number of AB equals CD formations form. And this is the most basic of the harmonic patterns. Now, as you can see on the Dow Jones Industrial Average, we did form a AB equals CD formation that touched the high, I believe, of 36.952, and has since pulled back to the 38.2% Fibonacci retracement value of around 35,841. Now, as for take profit targets, the 38.2% and 61.8% Fibonacci retracement values derived from legs A to D, as you can see here, the 2 points at this point and this point. These are considered technical targets for the AB equals CD, and these were derived, I think, these were designed by a gentleman called Scott Carney. If you're interested in harmonics, do check out his work. But what you can also see aligning with the 38.2% Fibonacci retracement is the 50%, the 50-day simple moving average, and that currently comes in at 35.834. Now, as you can see, we have had a bounce from this area. That doesn't mean we're not heading lower to the 61.8%, which is usually considered the second take profit target for the and for many the final take profit target, which sits just above the 200-day simple moving average, currently trading at 34.935. Now, we've got a similar situation on the other major US equity indexes. We can see we bounced on this is the NASDAQ 100 chart over here. And we bounced from the D leg, and we have since reached the 38.2% Fibonacci retracement of around 15,787, and have since reacted. Now, we could still try for the 61.8% Fibonacci retracement, which does actually align with the 50%. Let me just mark this up. The 50%. The 50-day simple moving average at 16,126. Now, with the S&P 500, we could still be seeing an AB equals CD form around the 491.87 area. Now, do note we also crossed below the 50-day SMA, and that comes in at 4681. This was we crossed below this area on Thursday, I believe. So do keep an eye out for this this potential formation. A very similar situation on the Nasdaq Composite. We've also bounced from the D leg of an AB equals CD formation, which also converged with the 200-day simple moving average of 14,726, and we have since reached the 38.2%, which again is a 38.2% Fibonacci retracement, which again is considered the initial take profit target. So you would have seen many traders either reduce risk to break even at the point of contact with here, and hopefully take some profits, because some may have been stopped out by the subsequent drop from this Fibonacci retracement. Nevertheless, if we do continue to bounce higher from the 200-day simple moving average, we could eventually reach the 61.8% Fibonacci retracement at around 15,581, which, as you can see, aligns with the 50-day simple moving average of 15,541. So this is really a harmonic market at present. So as I said, this may interest some harmonic traders watching. And finally, on to the crypto market. Excuse me. We have seen the Bitcoin. These are all daily charts, as was the major US equity indexes. So on to Bitcoin. We have seen the 50-day SMA cross below the 200-day SMA, which is commonly termed death cross. This can refer to a market that's heading for a potential for a further sell-off. Whether this comes about is debatable, of course, because we are currently testing support between 37,315 and 42,170. This is a reasonably long-standing resistance turn support area, which derives its history as far back as mid-May of 2021. So do keep an eye on this area. We haven't seen much from the crypto market as of late, but we could get a nice bounce from this area and potentially attack these the aforesaid SMAs. Pretty much the same situation on Litecoin against the US dollar. We have seen support from January of 2021 form between 103.03, 119.77. And as you can see, this has formed reasonably decent support since, and we have seen a near bounce from that area and a subsequent rally. Now, finally, on to Ethereum against the dollar. This was a noted support area in previous analysis. This combines, let me just expand this chart. This is combined of a Quasimodo support at 3009.77 and 2886.35. So the Quasimodo supports a 1.272%. I believe that's a Fibonacci projection, yes, and a deep 88.6% Fibonacci retracement at 2893.76, and also a traditional horizontal support level. So as I said, do keep an eye on this area. We have already had a bounce as expected, and we could potentially rally up to around the 3588 region. Okay, that's it from me and the team. Any questions or comments, please email the research team at marketanalyst@fpmarkets.com. Thanks for joining and have a productive week ahead. And I'll be back on Friday at the same time. Thank you.